It's another half hour of markets analysis and insights on Business Incorporated live from Channels TV. And here's what's coming up. World Bank plans electricity for 100 million Africans by 2030. South Africa's economy contracts by more than expected in the third quarter. In Kenya, some surprises with biggest rate hike in more than a decade. Hello and welcome to the program. I am Will Ibang. Let's kick off as always with market numbers. First up, major equities in Africa. We're at intraday. Major equities were trading positive sentiments at intraday. We see Nigeria up 0.78% at intraday. Strong in the 71,000 level there in South Africa, also up more than 0.5%. Let's look at EGX30, how they did at intraday. Up at intraday 0.2%. And Kenya closed Tuesday's session in the green, very approaching that 100 points level. Now let's dive into the NGX and see how activities are going on there and what stocks investors are trading. We're joined by Mukhtar Mohammed, CEO of Finance with Mukhtar. Good afternoon, Mukhtar. It's good to have you.
Thank you for having me, Will.
Mukhtar, just tell us, I see the banking stocks are on fire, the NGX at intraday. Access Bank hits its, a lot of investors hit their target with Access Bank. Tell us what's happening.
Well, Will, you always love the bull. The bull is on rampage on the market, especially in the banking sector. We're seeing major banks, even Stanbic, IBTC, First Bank hitting an all-time high since 2008 of 29 naira 40 kobo. We also see Access Bank crossing the 20 naira mark, selling at a moment at 20 naira 20 naira 50 kobo. GTCO is at 39.70. I think Fidelity Bank is selling at 9 naira. So it's a very pleasant time in the market now, especially with those in the banking sector. And a lot of investors are really smiling now. But again, we don't know how long this smile will last.
So just want to know, can you tell us what's driving this bullish trend? Can you just share some insights? Is there any market news, or is it on the bets of the recapitalization that is going to happen anytime soon? Or is it last quarter earnings reports that investors are waiting to get their hands on?
I think we hit the nail on three main issues that are driving the market. The recapitalization is dead, though we're still waiting for guidelines from CBN as regard that. So that also could be, it's helping the market because again, if they have to come to the market, they have to come with the right price. Also for investors to key into their earnings must be good. You're talking about the earnings season. Yes, they surprised a lot of investors with their interim reports, and so a lot of investors are looking towards year end, feeling that this time we get more bumper harvest also towards the year end, and also perception also is beginning to step in. When you look at the numbers, then you look at the perception for next year, you look at the economic projection. So a lot of things are helping to drive the equity price at the moment. But I think most especially, I think is confident, especially in the banking sector, with the kind of Q3 result they've pulled through. Even if you say some of them were driven by FX revaluation, but there's still a lot that was not driven by FX revaluation. And even in some of those equity like Access Bank, today Access Bank is driving this high because remember the third quarter result does not even include their foreign subsidiary. So by the time you get them adding their foreign subsidiary in their fourth quarter final year result, that's going to help the balance sheet of Access Bank. Also, UBA has been high, been driving high again. Their foreign subsidiary have been contributing so much to the numbers that we are seeing. Access Bank, GTCO also with the holding structure is beginning to take shape. So for First Bank, I think it's just all about the power tussle that has been ongoing for a while. And I think that is driving that stock high because of all the tier one banks, this seems to be the only one that didn't excite investors so much during their results up to this moment, the 40 kobo dividend dividend payment that was proposed have not been paid because of legal issues. But yet that stock is moving high to an all-time high. And sometimes what we call in investment the bandwagon, when somebody that was thinking of buying First Bank is seeing First Bank at 29, he begins to look at what will be the next big move. Then they will now begin to look at Access Bank, and then they will begin to look at Fidelity Bank. So that also could be responsible. They begin to look at UBA. That also could be responsible for the kind of movement we are seeing in UBA, in Access, and in Fidelity Bank.
Interesting analysis there, especially for First Bank. The part also going on there is driving prices up. We don't know how long till the court settle this matter, or who actually takes the helm of power. We'll wait and see where FBN Holdings is going to. But an analyst I spoke to, or I heard, talked about the banking sector may not meet the expectations of investors. Investors should trade cautiously in that sector, because after the recapitalization, it might not be as, appetizing as we think it's going to be. Do you share this opinion?
Will, I'm a student of history, and I like being driven my sentiment by history. If you remember, in 2003 to 2004, we have the banking recapitalization. That seems to excite investors, and they did not disappoint investors, because a lot of liquidity went in the system. They invested in a lot of businesses, and we saw some of those businesses grow. Then came the meltdown of 2008, and you saw those banks number came out when we had the global economic meltdown. Now, this time around, what is driving this is purely, if you look at their earnings, most banks have earnings are a double digit this time. Zenith Bank is doing almost 17 naira earning per share. You see UBA is doing about 12 naira per share. The Access Bank is doing that. Now, when you talk about earning per share, it's telling you how much they can pay investors. You don't expect them to pay investors 8 naira. You don't expect them to pay investors 6 naira. But you expect them by their result that, look, last year they paid 150. I'm talking about a bank like Access. They could afford to pay 160, 170. That's what investors are saying. UBA last year paid about 1 naira 20 kobo, and has already shocked investors with the 50 kobo dividend, interim dividend. So when you talk about recapitalization, that maybe when they recapitalize, they may not have the kind of funding that they used to have. I sometimes laugh at that, because we are trying to remember the CBN said the whole reason why they are trying to tell them to recapitalize is because they have to build a $1 trillion economy. And when you want to build a $1 trillion economy, then you're thinking about lending to the real sector. The CBN is saying we don't want foreigners to be the one lending to this sector. We want our Nigerian banks to be the one lending to this sector to grow the economy. And once the economy is growing, then the bank balance sheet will be expanded. So I don't share that sentiment that people should be cautious after the recapitalization. I believe that after the recapitalization, with strong monetary and risk monitoring, especially from the CBN, we could see bigger, stronger Nigerian banks moving in taking over the spin of Africa. Now, as we stand now, a lot of Nigerian banks are really running the show in Africa. Like I said, Access Bank is there, GTCO is there, UBA is there, First Bank, and some of them are even diversifying to the world economic cities like France. Some of them, just recent, we had Access Bank open a subsidiary in France. Zenith Bank open one of the subsidiaries also in France. So it shows that the Nigerian banks are looking global. And if you look at the recapitalization the recapitalization will surely be driven mostly by the second-tier bank. I don't think the first-tier bank will have any issue with recapitalization. So most of those funds that will come in for them, if they ever want to recapitalize, they might not do the public offer. They might do the right issue. They might do other issues to recapitalize. It's the tier 2 banks that we really need to look at their recapitalization drive and how they are going to go about it. So they don't share that sentiment at all. I want people to understand, and there's some that sentiment people shares about, the market has been bullish for a very long time, so you should be prepared for the meltdown. And I keep on asking people, when last did you see such a bullish run in the Nigerian market? For the past 8 years, when President Buhari came to power, we never saw such bullish runs. The market had just been a little bit stagnant because foreign investors were not there. This is the first time you are seeing a bullish run that is largely driven by institutional investors. So it has all the potentials to stay longer than we think.
Okay, so where do you see the market going? Just one word, is it going to be in the green or in the red? Because we're out of time.
Well, it's going to be very, very green.
Thank you so much, Mukhtar Mohammed, CEO Finance with Mukhtar, for his perspective on Business Incorporated.
Thank you for having me.
Now let's see how the Middle East performed at intraday. Well, I can tell you it was mostly red at intraday. The Abu Dhabi was down more than 0.5%. Dubai was slightly down 0.09%. Let's see what other indexes, the exchanges performed at intraday. We see Saudi Arabia up 0.2% and Qatari index down on nearly 1%. Now, for years, the EU and South America's common market, Mercosur, have been negotiating a free trade agreement, but hopes that a deal could be signed this week have been shattered. Joining us with more is Deutsche Welle's correspondent Chipunda Chimbelu in Berlin. Chipunda, what's holding up this deal?
Thanks for having me, Will. One of the reasons why this deal won't be signed this week is that Argentina's outgoing government is against it. Buenos Aires said that the deal would have a negative impact on its manufacturing and agricultural exports. Now, that is something that goes against the wishes of its neighboring country, Brazil, which would have liked to seal the deal this week. In fact, Brazilian President Lula da Silva was in Berlin and met with German Chancellor Olaf Scholz on Monday. There had been hopes then that there could be a breakthrough, but that didn't happen. Of course, it's not just Argentina that is holding up the deal. France especially has been calling for more additional environmental commitments from Mercosur states before the deal can be signed. In fact, French President Macron reportedly said that the deal is outdated, incoherent, and good for no one. Now, that's not the only criticism we've been hearing here in Europe. There's also concern over an influx of cheap goods in some countries.
So what would a deal mean for EU businesses?
Well, that depends on who you are asking. In France, the farmers have been against it because they fear competition from cheaper agricultural products. And that's why we've seen the French government call for stricter environmental standards. But here in Germany, the deal would be music to the ears of the country's manufacturing sector. Germany is an export-dependent economy, and a trade deal would open up a whole new market for manufacturers here. Right now, only 2.4% of German exports go to Mercosur countries, so there's quite a lot of catching up left to do between Europe's largest economy and Latin America's biggest market. Supporters of the deal say the EU needs a trade deal with reliable partners after Russia's invasion of Ukraine last year as well, and they are also saying that the bloc needs to reduce its reliance on China for raw materials. If signed, the agreement would be the EU's biggest yet, and it would remove 4 billion euros of import tariffs on European products.
So let's turn to the markets, Chip. What should we expect from the markets today?
Well, European stocks today are expected to trade slightly higher. Now, that comes on the back of U.S. jobs data. It shows that U.S. jobs dropped to the lowest level, so new jobs dropped to the lowest level in more than 2 years in October. Now, that data raises hopes that the labor market is cooling. So it also might be a sign that the U.S. Fed may start easing interest rates. Here in Germany, though, the data has a very different story. It's not bringing any optimism to the markets. German factory orders unexpectedly dropped in October by 3.7%. And the latest data is, of course, the latest sign that Germany's economy is on track for another contraction in the last quarter of the year.
Thank you so much, Chipunda Chimbelu, for that update. Now, U.S. stock futures were mixed on Wednesday morning after a brief uptick earlier. Futures tied to the Dow Jones dropped 0.22%. S&P 500 futures also dropped, and NASDAQ 100 futures also rose, however, 0.31%. Now, cloud company Box was a notable loser in after-hours action, tumbling 12% after reporting third-quarter results that came in below analyst expectations. But let's check out yesterday's performance with Maria Bird.
The U.S. stock market was mixed on Tuesday, as the Dow Jones was down at 0.2%, the S&P 500 was just flat, and the heavy tech Nasdaq was up at 0.3%, showing a rally from the tech industry. Many investors were hopeful that Tuesday would have been a better day after the downward turn of Monday. Investors were also watching to see the jobs reports, which showed a reduction in job openings over the past 30 days. This could mean major challenges in the U.S. economy in the weeks ahead, and specifically could mean that we might not see a reduction in interest rates anytime soon.
Thanks, Maria. Next, we take a peep into COP28 ongoing in Dubai. Stay tuned. This is Business Incorporated. Now we'll just take a quick peep into London before we go into other stories and see what's happening there. Juliana is standing by with the updates. Good afternoon, Juliana.
Good afternoon, Will. Hopefully you can hear me.
I can hear you loud and clear, Juliana. So you were talking with Ini earlier in the morning about UK landlords almost selling out their rentals because they can't keep up with the interest rates. How's that biting, and what can you tell us?
Yeah, that's absolutely right. We have had some data this morning having a look at the UK's property sector, which has gone through significant amounts of turmoil, beginning, of course, with the COVID-19 pandemic, lots of people selling up from small cities to go to large countrysides where they could have great space. So that affected the property market here. But then, of course, I think the main issue has been the successive rises of interest rates by the Bank of England. And you would think that with mortgages going up every month, that landlords would easily be able to transfer that into more funds in their back pocket at the end of the month. But that actually hasn't been the case. Recent data does show that there are, I believe, this year alone, about 30,000 landlords left the buy-to-let market. More landlords now in the UK capital are selling up rather than purchasing, because of course we are still going through a cost of living crisis. So even though it is much more expensive to rent in the capital, landlords are finding it very, very difficult to get back that money from people who are living in their homes. So what is happening is that there are so many more significant default payments. So therefore landlords are finding it much easier to sell up rather than stick within the sector.
Okay, we also seeing and hearing that Boris Johnson is coming under fire in the UK. What sound bites are you hearing?
Well, I've got to tell you, this is the biggest story of the day in Britain. And in fact, I presume tomorrow we'll be talking about it in its entirety tomorrow on Business Morning. That is the fact that, yes, the former UK Prime Minister Boris Johnson is giving his long-awaited testimony to the COVID-19 inquiry so that lawmakers can find out what exactly went wrong for Britain to lose over 250,000 people to COVID-19. Now, I've got to tell you, this is pretty much blockbuster. The former Prime Minister did arrive very early to the trial this morning in the dark at about 6:30 a.m. to try and get away from the swarm of press and pretty, I've got to tell you, angered, bereaved families who want their questions answered. There are some really painful terms that, according to those who have already sworn in front of the inquiry, that Boris Johnson said things like, let the bodies pile high. Of course, we all know about Partygate, when, you know, people couldn't see their dying loved ones in hospitals, but there were drinks being served every day at Downing Street. So it's pretty significant. I think it's important to note that at this stage, this inquiry is not going to find anybody guilty of any criminal proceedings, but but it is going to call into question the future of Boris Johnson's political career. And as I said, 250,000 deaths is no small matter. That means there are over 1 million people who are still grieving the fact that their loved ones died. But what we are beginning to find out is perhaps these deaths could be prevented. So like I said, blockbuster viewing in the UK, that is by far the biggest story of today. It will go on until tomorrow. There have already been some breakouts in the court, lots of people standing up and shouting. The judge over preceding the event has actually had to kick a couple of people out. But yes, we'll get more as soon as we have it.
Very sad tale there. Would hope that Boris Johnson, since he resigned as Prime Minister, would get a breather and stay out of the politics. But we still see him in pictures. Thank you so much, Juliana, for that update, and we'll keep track of it tomorrow. Now,
thanks, Will.
We'll move on to other stories where it's been 7 days since COP28 UN Climate Change Conference began in Dubai. And we want to get a sense of what's been happening so far and as world leaders gather to negotiate favorable deals to address the impact of climate change in their individual countries. Chinan Diko, energy expert and vice chair, African Energy Council, joins us from Dubai. Chinan, it's good to have you again on the program. Could you summarize, could you just tell us the key highlights, what's happening at COP28 so far? I do know that the issue of project financing has been a recurring one.
Absolutely, Will. Really good to see you again. So spot on, here at COP28 in Dubai, there's a huge amount of optimism in the air. Lots of people are really excited about, some of the announcements that have been made here and there. And particularly for Africa and Nigerian focus, we had President Bola Ahmed Tinubu here, and he made some really good announcements around carbon trading platforms, a few around electric buses as well that we'll see being deployed across Nigeria. This in addition to some of the compressed natural gas buses already that were announced, earlier in the year. So, yeah, generally lots of optimism, but you're 100% right. The issue of finance, project finance is coming up, and it's featuring quite a lot. In the past COPs, we've seen lots of announcements that people have made, but this has not been followed up with anything very concrete. This time around, it's starting to crystallize. So hopefully some of the announcements really translate to money on the ground.
Well, we do hope they translate to money, but we did hear President Bola Tinubu making an announcement about rolling out electric vehicles, buses across the country in Nigeria. But what infrastructure is required to make these fully functional in the country?
It's a very clever question, Will, I've got to say. So you're 100% right. It's not just simply about deploying electric vehicles or electric buses. The real question is around the infrastructure around that. How do you actually get these buses, to charging ports? How do you even set up the charging stations? All of those questions. These are the critical questions that have to be answered. So it's not a case of putting the cart before the horse. Definitely not. I think it's a very positive thing, the big announcement. But I think a lot has to be done in terms of infrastructure, charging infrastructure. How do you get that to happen? It's no use if you have a bus on Victoria Island, leg off, and you can't make it all the way and back, to mainland and back, and that would not be very useful. So the key thing there, of course, is that we need to deploy a lot of charging ports in very strategic places, very similar to what we have today with petrol stations that are very ubiquitous all across Nigeria. Would have to get to that level of investment.
But he also announced the carbon trading system. But what would make that, who would be responsible for making that functional? Do you know?
That's a really good question. So again, Will, at this point, there's not a lot of clarity around what department of government that would be responsible for the carbon trading platform. Yes, we have the National Council on Climate Change, NCCC, that seems to be the heir to the throne. But then we also have the Department of Climate Change within the Ministry of Environment. We also have, several other agencies that are angling and trying to, or building their own platform. So the first step would be some sort of a rationalization, bringing all of these parties, to the table so that they sit down and then work out exactly how this would happen. But to the point around carbon trading, this is a super idea. It's a great thing because it allows the country to raise finance. So again, going back to that question, Will, around corporate finance, for the energy transition. The carbon trading platform would enable and allow us to raise finance in a very, very important way. Actually, well, I'm just stood here right next to the Nigeria Pavilion. I'm not sure you can quite see that. I'm going to pan a little bit so you can see it's Nigeria Day here at COP28. I'm not quite sure you can see it, but you see lots of people standing around. This is sort of the Nigeria Pavilion, Sustainability for All, which is, UN agency, but Nigeria wants to further down. It's very exciting atmosphere here, I've got to say.
Thank you so much, Chinan Dikwa, Vice Chair, Africa Energy Council, for sharing those perspectives and showing us what's happening.
Thank you very much. Yeah, great pleasure. Thanks.
Now, moving on to other stories, the World Bank is planning to allocate $5 billion to bring electricity to 100 million people in Africa by the end of the decade, and that's according to the organization's president, A.J. Banga. Mr. Banga highlighted that ambition today as an example of how he plans to wield funds from the bank's International Development Association, IDA, which provides zero or low-interest loans to low-income countries. Now, South Africa's economy contracted by 0.2% in the third quarter of 2023, signaling that the economy may be falling into a recession. That's according to Statistics South Africa. The 0.2 quarterly contraction in the third quarter follows tepid growth of 0.5% in the second quarter, a downward revision from the initial estimate of 0.6%. Now in Kenya, the central bank unexpectedly raised its benchmark interest rates for the second time since Governor Kamau Tuge took office in June, citing the need to support the country's battered shilling. The Monetary Policy Committee increased the rate by 200 basis points to 12.5%, the largest increase since 2011. The central bank says this was aimed at supporting the shilling. The currency fell against the dollar for the 13th consecutive month in November and is poised for its worst year since 2008. And that's a wrap on Business Incorporated today. Thanks for watching. I am Will Ibang.